Well, the market is mighty excited in trade today, held by banks and Reliance Industries after the much talked about deal came to fruition. Commentary coming in from Mark Zuckerberg as well as Mr. Ambani, how transformational this deal is. We also spoke to both Jio as well as Facebook officials later after the announcement and came to know that part of the money raised will be utilized to reduce debt on the books, which did become a bit of an issue for Reliance lately. But we've got a very special guest lined up today on the show. We've got co-founder, MD and CEO of Avendus Capital, Ranu Vohra, a very experienced investment banker and an old financial services hand in the market. Ranu, very good afternoon to you, and thank you very much for chatting with me today. How's it for you working out at Avendus, working from home? How's the experience been? Conversations with your clients, etc.?
Well, I think, so far we are going well on productivity. I think we have two objectives in all of this. One is to work closely with our clients, have frequent discussions with them. A lot of our clients are confused, disoriented with the disruption in the market. A lot of transactions are going through a sensitive stage. A lot of folks are not sure of where to invest and how to invest. So I think it's those kind of conversations, and at one level, it's the conversation with our team members, keeping them enthusiastic through all of this.
Ranu, you've been an investment banker for decades. How are you overseeing the overall landscape of deals right now? And today being a special day, one of its kind deal getting sealed between a marquee tech giant, Facebook, and our own homegrown conglomerate, Reliance Industries. Just as someone who's been in the thick of things, doing big deals, what's your observation? A lot of Indian large corporates have been on a debt reduction drive lately, and on the other side, global capital is looking for quality companies in India.
So I think there are several reasons why this disruption caused because of COVID-19 will be useful in accelerating M&A. A lot of it will be, M&A you desire. So where I think companies are going is that because of the capital needs which are there, because of liquidity needs at this time, because of supply chain disruptions, because of changes in markets, a lot of companies are going back to the drawing board. And these international companies are now thinking of what should they be doing to make sure that they take best advantage coming out of this opportunity. At one end, it is trying to fight the fires at home. And at another end is the huge opportunity which comes because of this disruption. And I think most companies are kind of between these two. I think in the short term, as we can all see, there is a reasonable reduction in revenues, in volumes for a lot of these companies. For instance, in the pharmaceutical and healthcare sector, we were just examining hospitals, and hospitals are mostly operating at below 50% capacity because of elective procedures not being there and COVID-related issues. So you see that particular part of the market has slid 25% in terms of value over the last 3 months. Likewise, you see the diagnostics companies, the volumes are down 70 to 80%. That is not to say that the fundamentals behind these businesses, whether it is hospitals or healthcare or diagnostics, has changed in any manner. There are industries where this has presented a big opportunity. For example, the API industry, where 70% of our imports are from China. It's a great moment where we can realign the supply chain and try and kind of produce more, do more API manufacturing here, for instance. So that coupled with the international market will lead to changes, fundamental structural changes, and those structural changes will drive M&A. The moment the immediate social issues of lockdowns, etc., lift, I expect there to be a spurt in M&A driven by companies trying to take advantage of the growth which is going to follow. So today's announcement, of course, is a great announcement, and I think it's a big validation that even during these times you can have one of the largest, most impactful digital and tech companies, Facebook, putting in $5.7 billion in India's leading platform. So I think that is the way in which things will go. These are large markets, technologies, knowledge is coming out as a winner in all of this, and companies internationally want to go where knowledge and technology is.
Right. Ranu, these are difficult times. A lot of promoter groups which we are interacting with on the channel indicate that they are busy right now organizing their balance sheet, because one never know how long this winter could last. What kind of conversations are you having with businesses on the one hand, helping them, shore up their financial position, be it financial services industry or any other manufacturing, to ride over or tide over this difficult time? On the other hand, what kind of inquiries do you think would start coming in now from the investor community as well, now that the valuations are lower and a lot of people would need helping hand in terms of investor help?
So I think at one level, our companies were well managed. They had, I'm talking across the board, whether it is largely financial services or even manufacturing. I think there are market-driven reasons why some of those companies are where they are, and also liquidity-driven reasons, credit-driven reasons in India, specifically over the last year and a half, 2 years. The conversations which are happening with clients are largely on how do they survive this period. I think that's probably the most important question which all of them have. When they are looking at survival, where should they allocate whatever capital they might have, so that the projects, the businesses which are core, which are long-term value-generating businesses, do not have to suffer for businesses which have been slow to grow and have not been generating as much cash. So I think a lot of corporates have gone back to the drawing board, used it as an opportunity to see which are the core businesses they need to protect with whatever liquidity and capital they have. And of course, coming out of these opportunities are restructuring related opportunities. There are opportunities where companies will identify very quickly and very surgically the non-core businesses and look for buyers for those non-core businesses. When I look at it from an investor angle, from the perspective of, say, a company sitting in Germany or a company sitting in Colorado, looking at doing business in India or moving some manufacturing from China to India, a lot of these companies are actually, they know the Indian companies, but they think this is an opportunity to have a conversation and at least initiate a conversation. Most of these conversations in M&A take long. Strategic conversations could take as long as 12 to 18 months. But the time at which they are initiated, if the time both the buyer and seller want to have conversations with each other, is today the best time ever for a buyer who's been looking to move their manufacturing to India. So a lot of those conversations have kind of been initiated, and we see the possibility of not just, I would say, value and distress deals, but deals which are very strategic and will fundamentally change the way global supply chain works for the next couple of years and possibly a decade.
Right. I would also like your observation, Ranu, on the way things are moving on international fronts. We've just seen how the Indian government recently has tightened the FDI coming out of China in its move to be, not giving out control of high quality Indian companies to overseas entities. On the other hand, the Indians, either unlisted or even some of the listed companies, are in need of capital. India is a capital starved country. On the other hand, we see companies like Facebook actually pick stake here. How can India strike a good balance in conducting deals and still not giving away control or complete family silver, and on the other hand also make the maximum amount of opportunity which is opening up in India as Korean companies, Japanese companies want to move out of China, forming joint ventures here in India or even acquiring companies?
So I think the stage where we are most companies are a bit more inward looking at this stage. They are not very focused on growth and opportunity. I would say only 5 to 10% of companies today are focused on growth and opportunity. I'm talking of Indian companies. Most companies are still focused on how they can, as I said, survive and how they can basically restructure their businesses to be better prepared for potentially what might come, a few months down the line once this is behind us. So these companies are thinking of that. Now, when they look at the foreign prospects and foreign investors, there is capital which can come in from there. We still have a very benign, very kind of liquid environment outside India. We should not forget that. There is liquidity sloshing in the markets today in the US, which has to find its way. So I think it probably will do us great benefit if we still continue to seek and be investor friendly for foreign capital. At the same time, I've always held the belief that foreign capital cannot just determine your direction and your destiny, because we need a lot of capital, and foreign capital can have its own strategic reasons for it to come or not come to India at a point of time. So just promoting liquidity, credit, and domestic investment options, making the domestic environment very robust for investments in companies. Just as an illustration, when we look at digital companies, they have gone past a Series B round. Where do they get capital from? It's largely foreign capital. Why should it not be Indian capital? So there is, in my mind, there's a lot of work still to be done in getting Indian capital and different pools of Indian capital. For example, why are insurance companies and banks still slow in investing behind funds and kind of companies here? Why is credit offtake specifically in the SME sector still a problem? So I think we need to solve those problems here for the benefit of the entrepreneurs so that they can go through this phase successfully. At the same time, I would say, kind of open up and keep open and keep, your gates open for investment anywhere it comes from. I think this is not a market to be very selective. This is a market to make sure your businesses are healthy, and the businesses, if they don't get the financing, will not be healthy, and people will be forced to sell businesses which are not getting enough liquidity or enough equity solutions. So I would say that there is a time for both domestic and international capital to be encouraged in a big way, so that we can have more such transactions where not just large companies out of the international markets invest here, but Indian pools of capital can also access such companies.
Right. All right, Ranu, wonderful chatting with you on a host of issues. Thank you so much for your time. Let's see how it goes from here on. But once we open up, I'm sure there would be definitely, as you're saying, a lot of opportunities opening up in the M&A side, on deal side, as capital starts flowing once again. And mind